Welcome back. Time for First Call, when the BNN Bloomberg viewer gets an opportunity to put a question directly. Rafi, thank you for your call.
Good morning, Paul. Good morning, Brianne. Thanks for taking my call. Brianne, what are your views on Freeport-McMoRan? So copper will be needed for the data center build-out and the SoCal rebuild. So I assume this is a buying opportunity at this level. Do you have a position for yourself or your clients in this name? And do you see potential upside here? Thank you.
Yeah, I don't have a position in this name, but if I'm looking at a fundamental perspective and just looking at the chart, as you can see, 1 year down around almost 5%, looks to be hitting a strong support right now. From a value score, it scores about a 5 out of 10 for us, looking at our analysis. But from a fundamental score, about a 7 out of 10. So yes, I do think something that we're watching closely, especially in that sector, would be the dollar as well and how that impacts some of these commodities. We are still bullish of copper this year, but I think it might not play off until the second half of the year. Again, we still like gold, silver as well. Have seen some pullbacks and looking for a favorable entry point there. Freeport, again, not a stock that we do own, but from a fundamental score, its ranking would pass our ranking there.
And I'm just going to get you, Rafi, the analyst consensus on Freeport, and just see how the analyst ratings stack up. FCXUS is the ticker, and what Bloomberg says. Bloomberg surveys analysts, of course, on major stocks. 13 buys, 9 holds, and 1 sell. So the majority are in the buy camp, but only barely so. There are 13 buys and a total of 10 either holds or sells. Only one of those is a sell. Thanks, Rafi. Daniel in Markham, Ontario, is up next. Daniel, thank you for your call. Can you hear me, Daniel? Okay, Daniel wanted to know about CCL Industries.
Yeah, CCL, it is a stock that we do own for clients in our portfolio, currently trading, I believe, around the $74 per share mark. Again, in that consumer cyclical packaging, you're looking at labels. They are big producers in Avery labels. Not a huge dividend. I believe it's like a 1% dividend yield. But this is for CCL, not Carnival, I believe.
Right, wrong ticker there, control room. I'll get the correct ticker. Go ahead, Brianne.
Yeah, so again, we are still bullish on this stock. We see additional upside from here, continue to hold for investors, and continue to see value in kind of that consumer cyclical sector. So from a value play. Correct
ticker is CCL.B for CCL Industries in Toronto. That stock is now trading at $74.75. It's up, it looks like, about 10% over the past 52 weeks or so. There it is, CCL Industries. There it is over 5 years, up about 34%. Thanks for that question. Sorry we couldn't connect with the viewer directly. Anita is in Markham. Hi, Anita.
And Brianne, my question is on SmartCenters REIT, and could I have your general opinion on REITs in this market too, please? And Paul, could I have the street consensus on this, please? Thank you. I'll hang up and listen to you.
Thanks, Anita. SmartCenters, a huge, one of the largest Canadian REITs, not a stock that we own in the portfolio for clients. REITs have seen a little bit of a sell-off last year. We were potentially looking at adding to some of our names that we did sell last year, CAR.UN, Canadian Apartment REIT, and also GRT.UN, Granite REIT. But SmartCenter REIT, I think the only caution I would be a little bit at these levels is that growth for 2025 is still expected to be in the real estate sector about 8%. We did see about 5% in 2024, pulling some of that growth forward from the year, and then also 2.2% the markets or the sector's already up year to date. So, potential upside from here, just looking overall from the sector, we would be a little bit cautious at these levels, especially in the commercial space. If we're thinking Canadian economy is starting to get a little bit more weaker and is weaker, commercial real estate especially, is going to be a sector that is going to get hit with a weaker Canadian economy.
And Anita, the consensus is hold, 3 buys, 4 holds, 1 sell. A price target derived in that survey of $26.88. That's versus $24.38 as the current share price. Thanks, Anita. Let's go to an email from Mike. Could I please get your guest's opinion of Alimentation Couche-Tard?
Yeah, thanks, Mike. Couche-Tard, so a stock that we do own in our portfolio, continue to hold. I know we did kind of talk about the consumer staples sector as a whole, but even with the sell-off, again, I do see value in Couche-Tard here. If you look at this chart, right, 1 year it's sold off about 7%, and in kind of the consumer staples sector, we expect to see 5% earning growth. Again, you get this stability from the consumer staples sector. So if you are concerned about the Canadian economy, are looking for some defensive positioning, Couche-Tard is a great bet there. Again, we continue to hold for clients. I would be adding at these levels too if you are underweight or don't already own this name, and continue to ride. I think you could see the stock go up as high as 85 again throughout the first half to second half of this year.
Okay. That's her take on Alimentation Couche-Tard. Let's go to another email. This is from Robert. What do you think of Brookfield Asset Management in the year ahead? BAM.
Yeah, BAM, again, we own a few of the Brookfield, not BAM, that kind of owns all the conglomerates, but in the financial sector, just with the run-up we've seen lately, especially in financials, and Brookfield has participated. I mean, 1 year you're seeing almost 61% return. For me, if I was a holder of this stock, I would be looking at taking profits. I think analysts on the street have a price target of around 82. So again, a little bit stretched from a valuation perspective, and not a bad time to be trimming back and looking for other opportunities, or waiting for a little bit of sell-off and looking for another favorable entry point. Again, there looks to be a strong support just below that 80, if even around that 75. So again, BAM, great reputable company. There's no risks of any big concerns with Brookfield, but I just think if you are looking for more additional upside, I wouldn't be adding to BAM at these levels.
Okay, Brookfield Asset Management trading at a clear 52-week high. Let's go to Andre, who has written us an email message as well. What percentage of our portfolio should be in cash right now?
Yeah, thanks for the question, Andre. I do think right now, just with the valuations and how stretched the market is, even if you're looking at a lot of technical analysis and technical research, we have a little bit of cash just as a safety net right now that we are looking to deploy. I mean, this week we're going to see a lot of news, right? We're getting some big names on earnings that could boost the market, though. We're seeing both the Fed and Bank of Canada rate decisions. Again, our expectations are Fed to be holding. Bank of Canada, I expect to cut. But I do think that having a little bit of dry powder or cash on the sidelines right now is not a bad thing. For us, we have, for our clients anywhere, I would say between 4 to 6% of cash that we are still getting great rates in high interest savings, especially out of the U.S. We can still get some of those yields, 4.6%, so not bad for a cash position. Not the same that you saw a year ago, but again, I do think there's a lot of GICs coming up for maturity from investors that did take advantage of high rates, and with rates decreasing, they are looking for other opportunities. We have shifted some of our previous cash from last year into bonds or fixed income, and they've done very well last year with our yields, and also with interest rates coming down on our price appreciation of our bonds. So I think last year we did anywhere between kind of 9 to 18% in our fixed income for the last 12 months. So from a more conservative, safer asset class, I think that's a great alternative for people who also have cash maturing and looking for some upside there.
Brianne,